Welcome my dear students, I am CA Gayatri Sengupta Shetty and today we are going to discuss on fixed capital method and fluctuating capital method. In partnership form of business, the capital account can be maintained in two forms. One is the fixed capital method, the other is the fluctuating capital method. First we will speak about fixed capital method. What happens in fixed capital method? In fixed capital method, the capital amount remains same, means unchanged from start of the partnership business till the dissolution of the firm. Right? No adjustments are passed through this account. And in this account, if any adjustments have to be passed, that have to be passed through the respective partners' current accounts. So when we are maintaining fixed capital account for the partnership form of business, each and every partner's current accounts have to be opened, and all the adjustment entries have to be passed from there. So for example, if interest on capital, then we have profit earned, then share of profit earned, then the commission, salary, all these entries have to be credited to the current account, and interest on the drawings and this have to be debited, or loss suffered have to be debited to the current account, right? At the time of the dissolution of the partnership firm, what will happen? The debit balance of the current account will be debited to the capital account, and the credit balance of the current account have to be credited to the partner's capital account, right? Now when we speak about the fluctuating capital method, in fluctuating capital method the capital remains changing. It is constantly changing because with addition of capital it will change, with the withdrawal of capital again it will change, right? Here all the adjustments are passed to the capital account itself. If interest on capital, salary, commission, profit, share of profit, all these will be credited to the partner's capital account, and when there is interest in drawings that have to be debited from the partner's capital account itself. Okay, and at the closing balance, always see in the case of fixed capital account method, the closing balance is always on the credit side, right? But when we have the the current account, it may have a debit balance or credit balance, but in case of the fluctuating capital method, generally the balance is credit, but sometimes it may show the debit balance also. Okay. Why do we find just go for these two methods? Irrespective which method we are using, both these methods help us in finding out the equity per share, right? Equity per share, as well as also help us to find out the surplus capital and the amount of dividend that has to be distributed and the amount of tax that is paid. So we can say these are the two methods, fixed capital method and the fluctuating capital method. Thank you.